Today I'm going to be answering some of the top questions from the YouTube comments. And recently did a video of this a couple weeks ago, and you guys really seemed to like it. So that being said, there's so much to talk about. There's so many intricacies of trading. Give me those comments, give me those questions, and I look forward to answering your question in the next video. All right, before we get started, be sure to like, share, and also, most importantly, on YouTube, ring that bell, or if you're on Facebook or Instagram, hit those notifications. The reason I ask you to do that is we do a ton of stuff here, and we go live a lot. I go live every single day, and you're all busy. You got a lot going on. The great thing about ringing that bell, you get notified as soon as we drop either a podcast, a pre-recorded video, or go live. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Let's get right into it. Gonna start with the very first question, and again, drop me those comments below. Would love to answer your questions. So, first one is, the market seems to be shifting. Haven't seen as many of your core setup, that dip and rip or that VWAP hold high a daybreak lately. What do you think, etc. Great question, by the way, and I totally agree. So I'm recording this video end of April 2021, and a lot of you probably know what I'm about to say, but from basically March, April of 2020, when the shutdown first came and the world changed, that year, basically a year to date right now, was, I look back and I don't even really have the words for it, because the market's always been wild since the dot-com boom, last 20 years. And then 2016, we saw like a doubling of the madness. But then 2020 was just, ridiculous. I think back of just like, it's almost a blur. 2020, even though the shutdown, stuck at home, not traveling, it's just like, it was a blur of charts and madness, okay? So that being said, yes, I think the market is returning back to a sense of normalcy, okay? Now, when I say normal, that just means 5 crazy runners a day instead of 50, okay? And ultimately, I think it's a good thing, because I think there were a lot of people, maybe you're one of them, in this last year that, I think a lot of people got rewarded for poor decisions. We talk about bag holding a lot, holding that, maybe you trade some day one, first red or first green day, low floater, you buy the top and it fades all day, and you hold and you hold and you hold. In the olden days, you would get punished for bag holding, like punished. Your account would get driven to smithereens, okay? In 2020, a lot of people just would close their eyes, wait a couple days, and all of a sudden that thing would come back and double again. So I think a lot of bad habits were built in 2020, and I think a lot of bad trading was rewarded, and I don't think that is, feasible to do the next 5 years, 10 years, 20 years, 50 years. So when I say going back to normal, I think it's a good thing, because now you got to learn good habits. You got to learn to take a stop. You got to learn to do your due diligence the right way. You got to learn to have a process. So that being said, yes, there's been fewer dip and rips. Yes, there's been fewer VWAP hold high day breaks, those 2 patterns. But this is the last part of the question, I think, the last part of the answer, and I think the most important part. It only takes one, okay? I think a lot of people fall in love with action, okay, excitement, etc., and you can't trade all of them, okay? You can't trade 50 stocks a day, especially if you're under the PDT, and don't come to the market for action or excitement. Again, you just need that one good trade a day. So that being said, I'm running the VWAP scan right now, recording in the afternoon, and I got 5 stocks, okay? OCGN looking good, Nikola looking good, BTX looking okay. So there's really 3 out of that scan I got my radar on. I only need 1. So just know that whether it be the morning moves or the afternoon moves, get out of that mindset of falling in love with action. Because here's the thing. If you got a small account and you make $500 or $250 or $1,000 on one good predictable setup, That's all it takes to grow your account exponentially over time. Next question is, great video, Tim. Thank you. Awesome job. Over the years, as you've gotten more experience in trading, how did you refine your entries and exits? Thanks for all you do. Okay, great question. Again, entries and exits are so important when it comes to trading these wild movers, okay? Because timing. I mean, ultimately, when we're talking entries and exits in day trading, so much of that is based on the right timing. And I think the best way to do that is to plan out your trades in advance, okay? And key them towards the key levels we talk about. So you're looking at, let's say it's, I just talked about a dip and rip. One of the reasons I coach that setup so much on pre-market prep is, I'm doing pre-market prep at 8:30. The standard dip and rip is a break of the high of the day into that 9:45 window. What I'm trying to do is lay that out in advance so that you can be prepared when the move comes. And then you'll also hear me joke about, the Ivan Drago. I'm a big Rocky fan, from Rocky 4. The Ivan Drago is, if he dies, he dies, as Ivan Drago says. And that's that great thing about that setup, because if it never hits your pre-planned entry, and if it just opens red, fades all morning, you're not in the trade. So I think that's the biggest thing, is to plan your entries out in advance. So if it's a VWAP hold high a day and you're running your scans at noon and you're keying off that high of the day, or maybe even a VWAP bounce, write your entries down and then trade off of that plan. And if the stock fails or never touches your entry, just move on, okay? It's not about trading 500 times a day. It's about trading the best setups. So pre-planned entries. And then number 2, your exit should be based on that 3-to-1 risk to reward methodology based on the chart, okay? I need to come up with like acronyms for some of this stuff. But anyway, what you're looking to do when you're keying off of your levels, you're looking at whether it be a whole dollar, half dollar, maybe it's VWAP, maybe it's the previous day's high, maybe it's the previous day's close, that green to red, red to green line. You're keying your stop off of those levels. Then whatever that loss you're willing to take, that's 25 cents, 50 cents, that determines your goal, okay? And now you got to look at the daily range of the stock, okay? You can't have, listen, if a stock, if it's some 10-cent stock that has 3 cents of range, it's not realistic to expect that to move 10, 20, 30, 40 cents. You got to look at the average daily range, the movement based on the previous day and today, and see if you have a realistic goal. Then you base it off that 3-to-1 risk to reward methodology. Now, keeping it really short for this video, that 3-to-1 entry, goal, and exit is, I don't want to call it an advanced concept. It just needs a little bit more than a 10-minute YouTube video. Now, that being said, check out the Steady Trade team. I've got an hour-long webinar specifically talking about how to plan those entries and exits based on the daily range and the volatility of the stock. But those are the best ways. Pre-planned entries, and then 3-to-1 risk to reward on your exit based on key level. And give me an acronym for that. So next one. Thanks, Tim, for the detailed explanation. How do you tell when a stock is heavily shorted? Yes, I use STT. Number 1, thank you for using STT. And the question is great, and the question is so often kind of misunderstood, because a lot of people are looking at the short interest of a stock as reported in the SEC filings. Now, the problem, or in the data feed, I should say, the problem with that data is it's laggy, okay? So whether you're using StocksToTrade, I love, but no matter what platform you're using right now I hope this will change. And I feel like, especially in the world we're in with the explosion of information, that it will change. But right now, there is no way to know today the real-time short interest, because right now, you've got all, hundreds of brokers, all that you might be short a stock. There's no way currently to aggregate all that data to know what the real-time short interest is. Now, You might be like, oh, great. But keep in mind, it's not hard to figure out, okay? The bet, when you hear me say heavily shorted, you might hear me just say, boom, right off the bat, oh, stock heavily shorted. Well, how does he know that? He must be looking at something. Well, the easiest and best way to explain this, and you might be surprised, number one, low float, okay? That's always the key criteria, because invariably, if you're talking about a 2 million float stock, it's almost invariably going to be heavily shorted, because think about it. There's only a few million shares out there. It doesn't take that many short sellers to short a significant portion of the float, okay? It's what you saw with the GameStops, all the Wall Street bet stocks. They knew that the float was very small, and they knew once that stock starts going up, people are going to short that, absorbs that short interest in the float very quickly. It's just basic math, okay? So low float is always the number one, and you can almost but have high certainty that any big mover that's low float, there's going to be a bunch of people piling in short. Next thing, and this might be the most surprising part, or maybe it makes sense to you, the more dubious the stock, the more sketchy the stock. I mean, if it's got a P.O. box for the corporate address, they got no products. I mean, this is actual real stock we were trading the other day. I can't remember the ticker, but I was live on a webinar. We break it down and, P.O. box for the corporate address, web page, page can't be displayed, broken web page, just like everything, no financials, no sales, no products, like 2 employees on the roster. I mean, it was just a disaster. But what that does is, what I just walked you through, anybody can research that. You can research that right in StocksToTrade. So what people do is they see that. They see a broken web page, a P.O. box, or they go to the address and it's a house in some, sketchy neighborhood or something. So that attracts short sellers, justifiably so. So the sketchier it is and the lower the float and the bigger the move, because we know shorts love to add to losers. That's why so many of them get torched. So big move, low float, dubious data, dubious background just attracts short sellers. Like, we could probably do a little poop emoji here, but it just attracts short sellers, justifiably so. And when there's only so many shares in the float, the short interest is going to explode. Don't overcomplicate things. It would be awesome. And again, I gotta believe, hopefully a year from now, we will have real-time short interest. There's a business idea for you there. Young man or young woman, take that business idea and run with it. I'll be your first subscriber. But just know it's not that hard to figure out. It's just, if it smells like a short squeeze, it probably is a short squeeze. All right, last question. Awesome segment. Been with you for a year now, and this is a great idea. It's nice to slow it down and get some extra splaining in. Question for next. Float, what is it? Break it down and explain why it's as important as it is. Thank you for all you do, Cat Daddy. Many of you might know, actually, I wore on pre-market prep one day, I wore my Cat Daddy shirt that my daughter bought for me. So if you follow me on social media, by the way, I am TBOHEN everywhere. T Bohen, Instagram, Twitter, everywhere, Facebook. That's my only account. Any underscores, dashes, 1, 2, 3, 4s. It's not me. I'm not DMing you to quadruple your money in some sketchy crypto scan, okay? But if you follow T Bohen on Instagram, I love my animals. Particularly, I love my dog, but I have a certain affection for my cats, particularly Spencer. He's my favorite. But anyway, thank you. So what is float? Very simple concept. And just keep in mind, at the end of the day, it's the supply, okay? So when we talk about the tradable float, that is the amount of shares that are freely tradable on the market by retail traders, institutions, people like us, okay? Now, insiders may have shares that are locked up. Again, you can kind of Google that, but like a lot of executives or the management team, they will get shares granted to them that they can't necessarily sell until certain milestones are hit or certain timelines are hit. So those shares aren't included in the float because they're locked up. But the float is the freely tradable shares. And why do we care about the float so much? Like I said, it's the supply. We are trading madness when you're talking day trades. When you're talking big moves, 100%, 200, 300% movers, what makes a stock make those crazy moves? Supply and demand. And I know I talk about this a lot in these videos, but it surprises me how many people overlook the fact that the stock market is a market. What is any market based on? I don't care if it's the vegetable market, the fish market, the egg market, the coffee market. It's supply and demand. If there's, let's use coffee. If there's a frost and the crop gets destroyed, well, the demand's still going to be there. You don't have enough supply. Now your coffee's going to be double in price. Or vice versa, if the crop explodes and there's a surplus of coffee and the roasters got it laying everywhere and they're like, we need to move some coffee, that's going to depress the price because there's more supply than there is demand. That's why we love low float stocks. When you got a 2 million float stock trading 20 million shares in pre-market, that tells you, that's 10x float rotation, what we call that float rotation idea. That tells you that the demand is there. There's 20 million shares traded early in the day of something with 2 million of supply. So that's the basic concept. Just understand at the end of the day, it is that supply and demand concept. And the lower the float, the higher the potential for the big moves if the volume is there. Okay. Listen, you can scan for any low float stock in StocksToTrade, but the volume needs to be there. You can't be buying some 2 million floater if it's trading 100,000 shares a day, because you can see what they're at. You don't have that supply to demand offset. So that being said, keep the questions coming. I really enjoy these. It's funny. I've done hundreds, maybe thousands of videos on the channel now. And a lot of them are me and the team brainstorming, coming up with ideas, but you never really know. Like for me, it's like, hey, people might like this one, but I really, really enjoy answering your questions because you're watching these videos, you're listening to the podcast, and you hear a term or you hear a concept, and you're like, well, I want some, extrapolation on that. So drop those questions in, keep them coming. And as always, these videos are fast. I talk fast. I go fast. I know everyone's got a limited attention span. So if you want more than that 10-minute video or that 5-minute video, check out the StocksToTrade team twice a day. Every single day, I'm live answering every single question. And I think it's the best way to get down that path of being a consistently profitable trader. So check out the StocksToTrade team link below, and I look forward to seeing you on the next video.